Of time. Well, let me just give you a little quick background. So, I do probate, trust, estate planning, trust and estate administration. We do some trust and estate litigation. We have 6 attorneys, 2 in Southern California, 2 in the Bay Area, and then 2 up in Roseville. We used to live in Merced. I worked for a law firm called Berliner Cohen. That's where my wife grew up. I grew up in Ceres, and so we kind of have a lot of connections out this way. But one of the things that we run into a lot, clients come in to us to say do their living trust. So we pull the deeds to their home. We might see title issues there that we need to address, right? Maybe the wife is still living, husband passed away, but only his name was on the title to the home. Or, mom or dad pass away, kids are getting ready to sell their house, and they come to us and they say, hey, mom and dad had a trust. We say, okay, great, should be easy to sell. We pull the deed, we see that the house was never put in the trust. Okay, or maybe mom and dad own a piece of property, but instead of owning it husband and wife as joint tenants or community property with rights of survivorship, we look at the title and it says husband and wife. Doesn't say joint tenancy, doesn't say community property. Lots of different little issues that you run into, So you guys have probably all encountered this, right? Client comes to you and say, hey, I want to sell this property, or I want to sell this property, and then, when you go pull maybe the preliminary title report, you look at the title and it's like, oh shoot, how long is this going to take, or how much money or time is going to be involved before we have clean title? So now we can go ahead and get it listed, get it sold. So that's kind of what I wanted to talk about today, is maybe some of the procedures. Because, a lot of people, who's heard of probate? Who knows what probate is? Who has heard of a living trust? Or revocable trust, family trust? Anybody who can tell me why you should have a trust versus a will?
Tax benefit.
Wrong.
All the fees, court fees.
Court fees?
So it ended up in probate.
So it doesn't end up in probate, right? So, and not to point you out on the wrong part, but a lot of people think, oh yeah, taxes, maybe I need a trust so if I get sued, I don't have to worry about liability. A lot of people think, oh, if I have a will, that's enough, I don't need a trust. So I'm going to talk a little bit today also just about some of the benefits of having a living trust and how that can help us avoid or eliminate the whole probate process, okay? So I'll just kind of go through these slides. Like I said, I've got a few maybe kind of tips, tricks, if you will, where you do have a client that encounters a property issue. Well, what's the value? Is the value worth less than $150,000? Is it worth less than 50? Is it over 50? Is it a husband and wife? Husband passed, but we can prove that it's community property. Lots of different little things that we could maybe potentially look at. And then at the end, I've got a couple of tips that anybody that might want to get into probate sales, we can talk about some of the tips or some of the things that I see on a regular basis. There's attorneys that are just, that's a big part of their business. How do they get those referrals? And maybe from an attorney standpoint, what are some things that I might be looking at? If a realtor contacts me and wants to help with the sale. Number one, especially being, what a probate sale is, what forms are required and stuff like that. So, any questions before we get started? Okay. So here's, again, kind of the quick overview. I'm just going to go over probate real quick, kind of what that entails, kind of why we want to try and avoid it if we can. Again, some of the 5 or 6 different sorts of methods that we can use to avoid probate. One of those being this, sometimes referred to it as a mini probate, but petitions that you can go through that are sometimes still involve the courts, but they're a lot cheaper than a full-blown probate. Can be a lot quicker as well. And then again, just talk a little bit about how you can maybe get probate leads if that's something that you're interested in. So what is probate? Generally, it means the court has to get involved. Okay, so I'll just give you a quick example. You've got a client, and she passes away, and her kids come to you and say, "Hey, I want you to sell mom's house for me." All right. So the first thing we do is we pull the deed. What does the deed say? Does it say mom's name on it? Does it say living trust? Does it say mom and dad who previously, had predeceased? But based on that, then I can kind of look at that and say, okay, this is the methodology that we have to use. Well, let's just assume that mom's house just has mom's name on it. No problem, but it says mom individually, no mention of a trust. Okay. So in that situation, I've got to go to court, and I have to ask the court to appoint somebody as the administrator for the estate. Somebody needs to be formally appointed by the court in order to be able to even sign a listing agreement. We'll kind of go through that. But the goal there is to basically clear title. Okay, we've got to get it through the courts, and at the end of the day, we want the court to bless the everything the administrator did and say, okay, now this estate's ready to close. The assets can be distributed. And we'll see how the property can actually be sold during probate. So you don't have to wait for probate to be all done. But the first step is actually getting somebody appointed by the court to do that. Why does probate happen? There's no estate plan in place. One of the things we'll talk about, a lot of clients think, oh, if I have a will, that's enough. Okay? If I have a will, that dictates who gets my property. Easy, no problem. But the reality is that if you only have a will and you own real estate, your estate's still going to have to go through probate court. Another issue that we might find is clients create a living trust. So when you have a will and a trust, a will is a document, simple document. It can say everything I have, I leave to my wife. My wife's not living, I leave my assets to my kids. With the trust then becomes the document that dictates how everything gets divided or distributed. The biggest difference is with a will, the title to my home still stays in my name until I die. And then upon my passing, my estate has to go probate. My will dictates who it all goes to. With a living trust, in the trust it says, okay, I'm David Wade, I'm creating the trust. It's for the benefit of my wife and then my kids. If my wife's not living, it goes to my kids. If my kids aren't living, it goes to my grandkids. But all that kind of detail is spelled out in the trust. But then on the title to the home, we actually change the title. Okay, so instead of me holding title to my home as David Wade, an individual, I would actually change the deed so it says David Wade, trustee of the David Wade Trust. You guys have probably seen that on deeds, right? Or somebody selling it, trust is selling the property as opposed to an individual. So that's key, is the title needs to say the name of the trust. Otherwise we have, as it says up here, an unfunded trust. Okay, so clients come to us all the time, we create the trust. We will actually take care of retitling the home for them. So if they come to me and they say, I want to create a living trust and I have property, we'll actually change the deed. We'll take care of recording that for them. But then we give them the paperwork and say, you've got to go change the title on your bank account. You need to update your beneficiaries on your retirement account. All of that is part of funding the trust, getting the assets into the trust. And the way you do that is change the title. And then we have just different deed issues like I described earlier. Husband's name's on the title because maybe he was the only one that could qualify for the loan. And then husband passes away. They never got around to putting wife's name on the title or vice versa. So then what do we do? So that's a deed hole or a deed issue where the property really belongs to the wife, but now we've got to go through a separate court procedure to prove to the court that it actually does belong to her. Okay, so things I'm talking, you guys seen similar sorts of issues in your different transactions that you've had to deal with? Again, how do we avoid probate? One is doing a living trust. Okay, create the trust, put the title of the home in the name of the trust.
Is there any difference between unfunded living trust and living trust?
Yes. So if the only asset I have is a house, if I create the David Wade Trust and I change the title on the home, so it's the title to the home says David Wade Trust, I've now funded the trust with my home. If I create the trust but I never get around to changing the title to the home, then the trust is unfunded. It's basically just like this shell with nothing inside it. Okay? So when
So you have to move your properties into a trust as well when you make trust, right?
Exactly.
It's not just making the trust and then it just doesn't work like that, right?
Exactly. Yeah, if I have a trust, and if I attach a list of assets to the trust, and I say I'm putting this bank account and this investment account and this property and this business, I'm putting it all into the trust, but you don't actually go to the step of changing the title on the accounts or changing the title on your property, then the trust doesn't do you any good. It still would have to go through probate. Okay. So a simple way to pass a piece of property would be setting it up as joint tenants, right? Husband and wife as joint tenants. Husband, wife dies, the property automatically passes to
Simple way to,
and vice versa, right? So you're holding it as joint tenants. You and I could hold a piece of property together as joint tenants, even though we're not, related. But that just is a way of passing that property to a designated beneficiary in a sense. Sometimes clients will come and they'll say, hey, I'm getting older. I want to put my child on the deed. That way, if I pass away, it just automatically goes to my child. Well, that is a simple way of avoiding a trust, avoiding a will. It just automatically would pass to that designated joint tenant. A couple problems with that. The one is, I've got a son who's 25. Do I really want him on title to my home? What if he gets in a car accident and gets sued, right? Or he wants to go and try and get a loan against his interest or whatever. So now I'm putting my property at risk, for something that he might do. So not really the best way to go about doing it, but you'll see it really regularly, certainly between, couples that own property. We won't touch a lot on irrevocable trust, but just to point out there is a difference between revocable trust and irrevocable trust. So if anybody here is, doing their own planning, your parents are doing planning, you want to make sure that when you pass away, your assets go, to your spouse or to your kids. 95% of the people that do a trust, it's going to be a revocable trust. It just means it's one that can be amended or changed at any time during your lifetime. Clients with really large estates where they've got lots of property, lots of money, about their estate having to pay a big tax when they die. Basically, right now the government says if you're an individual and you have more than $11 million when you die, then there's a tax on anything over $11 million. Anybody here right now that needs to worry about that?
Yeah.
Not yet? Yeah, still a few more. That's true. But there's some other sorts of irrevocable trusts.
When we do some kind of change, do we need to do the recording again accordingly to the...
So if you buy a house, you put the house in the name of your trust, and then you amend or change your trust later on, right? Maybe you want to change who the successor trustees are, who the beneficiaries of your trust are. You don't have to go change the title to your home. The home is still under the name of the trust. And that trust, you're going to have it for the rest of your life, unless you revoke it, which the only time you'd really probably ever revoke it is if, say, you got divorced and you don't want that trust anymore.
And then clear the revocable and irrevocable, what's the difference? Main difference.
So just irrevocable means you can't amend it or you can't change it. So clients be like, well, why would I ever create an irrevocable trust? And there's situations, right? Your mom says, hey, I want to give some money to your child, but they're only 15 years old. Well, I don't really want to give them a check, right? Well, one way to do that is you could create an irrevocable trust for that child. The money goes in there, but then the trust itself says they don't get it until they turn 25 or something like that. Or maybe somebody's getting sued. Okay, so one of the ways that you can protect those assets, from creditors is put it into an irrevocable trust. That way, if I get sued, I don't own it anymore because it's in this separate trust, this irrevocable trust. Problem with that is I no longer own it, I no longer control it, I've given it away. And that's why I don't have to worry about creditors taking it, is because it's not my property anymore. So how many people really want to give away their property, right? But there's different situations why you might have something
Can
like
you
that.
also be in that irrevocable trust as a receiving party too?
Generally, you're not supposed to receive any benefit of it or be the trustee of it. But again, it depends on the purpose in setting it up. Okay. LLCs, limited liability companies, family limited partnerships, corporations, that's a potential way to avoid probate. I could put my property into an LLC. You still want to have something in writing that says who gets your LLC interest when you pass away. Okay. So anybody ever seen we call it transfer on death deed? Up there I've got listed as a beneficiary deed. It was a new deed that came into effect January of 2016. It's basically a way to avoid having, say, put your child on the title to your home and have to worry about exposure to it, but passing your property directly to your beneficiary. We'll kind of go through those a little bit. On its face, it sounds like a really great idea, simple way to avoid trust and stuff like that. It's pretty new, and there's kind of some issues, and you're kind of limited as to it works in the right situation, but it's not really the best way for everybody. When we talked about funding your trust, you still need to get your bank accounts into your trust. You still want to make sure if you've got minor kids that your trust as the beneficiary of, say, your retirement accounts or your life insurance. So, but different banks and stuff, they have POD accounts, payable on death, or transfer on death accounts, where you could actually go in and name who the beneficiary of your account is. So these are just some different tools, for avoiding probate. So most of them deal with real estate, but non-real estate assets as well. So living trust is especially important in California. What happens if and we get this all the time. I've got a client that maybe moved from another state, and we're like, well, why do I need a living trust? I hear probate's not that big of a deal. I hear it's not really that expensive. And I say, well, what state are you moving from? Okay. Each state is, and I'm happy to send copies of this presentation, by the way, to anybody afterwards. So if you want, sorry, I didn't have handouts, but for taking notes or something, if you want, I'm happy to send that to you as well. Just my email will be at the end. I've got cards, and I'm happy to share that with you. Tax laws really don't have anything to do with probate, but we'll see that probate is an expensive process, especially in California. I was just at a conference in San Diego last week and was talking to an estate planning attorney from Iowa or something like that. And we were talking about the differences in probate. And we'll see, like in California, if I've got a $400,000 house, and there's a $300,000 mortgage on it, well, if that house has to go through probate, the lawyer's fee on that is $11,000, and there's an administrator appointed by the court. Their fee is $11,000, and then there's about $2,000 in court costs. So you're looking at almost $25,000 on, say, an estate that only has equity of $100,000. And after you subtract out closing and escrow fees, realtor fees, all of a sudden, that's a pretty hefty chunk that you're having to pay. Other states, they just do it, what's a reasonable amount? Well, you can certainly argue that California's amount is not reasonable, but the fees are set by the court. Okay. The other benefit of trusts is they're private. Okay, so who does a lot of probate sales? Nobody.
I
So
don't do probate sales, but I have clients that go through it.
you do, okay. Well, so basically everything that you file with the court is public record. Okay, so any of you could go down to the court. In fact, you wouldn't even probably have to do that. You could probably sign up for a service which will send you all the recent filings from the court. So every time somebody passes away, you can look at the page 2 of this petition, and it says, what were the assets? It doesn't break them down at that point into detail, but it says they had this much real estate, here's how much the mortgage was, here's how much personal property they had, here's how much cash they had. So you can look right there and you say, oh, they've got property. Well, what happens when somebody dies? Usually the property needs to be sold. Hey, there's an opportunity for me. Why don't I just reach out to the administrator of the estate? We know they're going to need somebody to sell it. And so all that's public record, which is great for you, for the administrator and stuff like that. They don't like it so much. So how do you avoid that? Well, obviously some of the things that I'm telling you here, won't necessarily help you in getting more probate sales, but would certainly be helpful either for you personally or as you're talking to clients. And notice that you don't have a living trust. Is that something that you would be, want to learn more about? So trusts are private. There's no court filings. it's not public versus with regular probate, it is public, okay, everything they have. And that's just the initial petition. Then we have to go get all the assets appraised. We have to say exactly what accounts they had, where the accounts are located, how much the properties are worth, if they had those worth. And you list that all on what we call the inventory and appraisal. You file that with the court. That tells everybody that wants to see exactly, what the assets are. So I don't know how many of you want your whole, stuff spread out there for everybody to see. But that is one of the problems with probate. But again, the trust can help you avoid that. Again, talk just a little bit about those beneficiary deeds. There's just a lot of uncertainty with them right now. Some title insurance companies are refusing to issue title insurance on them. Oh, I don't know. None of your clients are going to want to buy a property they can't get title insurance on, right? So again, it's a case-by-case basis, but for the most part, it doesn't really work for a lot of people. So some small probate options. And so these kind of numbers are the key ones that you kind of want to be thinking about. Who's ever helped a client buy or ever sold a property worth $50,000 or less in California? Okay, a couple of you. Probably not a whole property, right? But sometimes you have clients that maybe own 5% interest in a property or a 10% interest. Okay, well, 10% of a $500,000 property is $50,000, right? So you wouldn't want, a property to have to go through probate if that individual interest is only worth $50,000. So there's one procedure that we can use for that. If the value is under $150,000, and there's another procedure we can use for that that's a little bit more involved. And then if it's over $150,000, then we have to go through probate. We could use spousal property petitions, Hagstead petitions. Sometimes you have an issue where somebody has a trust, you pull the deed, it says the David Wade Trust on it, but we can't find the trust anywhere. What do we do in that situation? So I was going to kind of go through those a little bit more in detail. They all take, these shorter ones all take, this is 6 to 12 weeks. Usually it takes a minimum of 2 weeks to get into the court. We were all excited yesterday when we filed something in Sacramento and they said we could have a hearing in the end of December. It's like, well, wait a minute, sad that we're excited when it only takes 60 days to get in front of a judge. But another one I filed, they said come back January 27th. So usually looking at a few months, before you can even get in, which if you had properties that are being sold in any of these scenarios, you'd be looking at a minimum of 3 to 4 months probably to get in front of a court and get that final order saying title's clear, now you can sell it. So at that point, maybe you're then in the holidays, maybe you've missed that window to sell, maybe the market's going down. So this is really all, again, more to help you guys identify issues with your clients, especially if you're helping somebody sell. And if you pull that preliminary title report, you see that there's a deed issue, the sooner you can prompt them to get in and start dealing with it, the sooner you'll be able to get that title clear so you can go ahead and get it sold. All right, so the under 50,000 affidavit. So again, you're not going to see this very often, but like I had a client that had his dad died and he had a partial interest in a lot that in Lake Tahoe that was you couldn't build on it. So you're kind of, what do I even want that for, let alone what can I guess you could go set up a tent and walk to the lake, but otherwise there wasn't a whole lot you could do with the property. But at the end of the day, we're like, okay, well, what's this worth? Depending on what it's worth, that'll help us determine the procedure to get it transferred. So the first thing you do is you start by having the property interest appraised, and there's what's called a probate referee. It's basically somebody appointed by the court to do appraisals. And these guys are magic. They can appraise everything from what's a gun worth or what's a ring worth, what's a small interest in, a Tahoe property that you can't build on worth. So I'm being a little facetious in the sense that they have to appraise everything. There's no way that these people know how to appraise all this stuff. But that's their job and sometimes they'll go to experts. But what you do is you ask them to appraise the interest, and then when it comes back, if then based on the value that it comes back at, then I know what procedure I can go forward with. If it came back at $55,000, I probably would go back to them and say, hey, did you really consider this? Did you think about that? Try and get them below that 50,000, because if I can get them below the 50, then I can use this simplified procedure, which is basically attach the appraisal to this affidavit, walk into the court, clerk, hand it to her, she stamps it, it's all done. Okay, so that one's pretty easy. But again, unfortunately, we don't run into those situations a lot. The other drawback is, keep wanting to walk up there and point, but but the drawback to that one is you do have to wait 6 months. Okay, so it's kind of the court balancing. All right, we're going to make the process easy. We're not going to clog up our court system, but at the same time, we're going to make you wait a little while. If you want to go faster, which wouldn't necessarily be faster, you could go with one of these other court procedures. So what happens if the value of the interest is between 50 and 150? Okay, then there's another procedure we could use. Again, we get the appraisal first. If it comes back and it's worth, 149, we know, okay, I can use this procedure. And when it came back, it was like 160. So the problem with these appraisers is they don't actually go in, they don't do measurements, they don't look at the inside. They just do a dry comps, right? Well, in this case, the client's like, hey, there's all these issues with the home. I said, hey, go get estimates on how much it would cost to replace the roof and things like that. We submitted that to the appraiser. What do you think the value came back at? 150. So they'll work with you, is my point. But you get that valuation done. Then if it's, me and my 4 siblings and my parents had a piece of property, we all sign the paperwork. We submit it to the court. The court actually has to set a hearing date. There's a $435 filing fee. The court will say, all right, come back in 2 or 3 months. Nobody files any objections. That property is then ours. Okay. So, but anybody ever here tried to sell a piece of property that had multiple owners? Ever sold it had multiple owners and they didn't all get along?
Yeah.
How easy is that? Right? What should the purchase price be? What should the sales price be? Who should the agent be? Hey, I think we should make these improvements before we put it on the market. Hey, I think we should sell it as is. Right? Those aren't fun, right? But again, that's another procedure that you could use. So spousal property petition. So it involves spouses. And like I said, the typical example would be husband and wife, they buy this property together. Maybe only one spouse is working. So when they go to apply for the loan, the lender says, hey, don't put both of you on the title. It's just the loan because, maybe one of them doesn't have income or one has bad credit. Let's just put you on the title. Let's just put you on the loan. And then, or just put you on the loan. And then when we close, you'll be the only one on title, but then you can always transfer it to your spouse later. So the problem then, of course, becomes, never get around to putting the spouse on. Yeah.
Just back to that one question, when you got multiple owners, is there a way that one person could buy out everybody if they wanted to?
Sure.
What the process or outside of that process?
One person can always buy the other person out. So let's say there's 4 of us and we think the house is worth $400,000. So the 3 of us want to keep it and you want to be bought out. Well, how much do you want for your 1/4 interest? 100? Well, wait, if we put it on the market, we'd have real estate commissions, we'd have closing and escrow fees. Who knows if we'll even get 400,000? So, should I give you 400 or should I give you 80? So, if I'm selling or if I'm the one paying you, well, hopefully we all get along, right? But if we don't, you're like, hey, I'd be fine with 80. And I'm like, hey, I really need the money. I think it should be 100. Or I say, yeah, maybe the appraisal comes back at 400, but the reality is if we put it in the market, look, we're in a strong market, we could get a bidding war, we might get 500 out of it. So I'm really kind of throwing all those things out there because, for me at the end of the day, until you actually put it on the market, you don't really know what it's worth. I had clients come in the other day and 7 kids. one sister lives in Texas and there's some property down there, and the two sisters are like, hey, mom wanted sister to have the property. I'm like, okay, yeah, but she's going to get a lot bigger chunk than the rest of you. They're like, oh yeah, we don't care. We talked about it. You know, that's what mom wanted. I'm like, all right, well, that's how it should be, you know. But that's unfortunately that's not the way it goes lots of times. But at the end of the day, yes, you're definitely right that you can buy somebody out. If it's still in mom and dad's name and it's not in a trust or something like that, we still might have to jump through some of these hoops to get clear title. Sometimes what we'll do is as we're going through probate, we will have like one individual say, hey, I want to be bought out. I don't want to. The other four say, we want to keep the property. The other one says, I want cash. Well, if there's no cash in the estate, they got to figure out where they're going to come up with the cash. But they can assign over their interest in the house, and the siblings can say, hey, we'll pay you later, or we'll put some money into the estate that can then be used to, fund your buyout or something like that. So there's always ways to work it out, but that's the biggest thing I've run into is just people can't agree on what's my interest really worth. Yeah. I got a client, mom died, they had two properties in Laguna Beach. One's kind of up on the hill and one's right on the beach. So 2 kids, total estate properties are probably worth $8 million, right? Well, problem is the biggest one that's worth like 5, the sister wants to keep. She doesn't have the money to buy her brother out. She's just kind of hoping that he'll, concede or just, be nice brother, let her keep the house, because it was the family home. But he's like, wait a minute, how's that fair? So they're working it out. Well, actually, what they worked out is they're going to have to sell both of them. But but spousal property petition, again, is where you run into a situation where a husband and wife own a property together. It's only in the name of the husband or the wife, and he or she passes away. How do we get that title to the spouse? Well, there's paperwork that we can file with the court, and as long as we can prove that it's community property, it's property that, again, the money for the down payment came from our joint funds. The money that went to use to pay the mortgage every month came from our respective jobs. As long as you can prove that it was community property, and usually it means you go all the way back and you say, okay, yeah, if you got more correspondence back and forth between like the lender, hey, we're not going to put your spouse's name on the loan because he or she's not working. The more documentation that you have that you can prove to the court that it is in fact community property, then the court in that scenario will usually say, okay, we're not going to make it go through probate. You still got the time and money to go through that process, but at the end of the day, you're paying a lawyer just hourly to, and maybe it's like a spousal property petition, assuming that nobody objects, might cost you with filing fees a few $1,000s on that same $400,000 piece of property, whereas the probate, like I said, it could be upwards of $25,000. So, and still take almost a year to complete. The only potential issue where this could be a problem is the last line there, which says if you have stepkids. So I had a client recently whose husband passed away, and she had kids, he had kids, only his name was on the title. Okay, well, she's like, I've got bank statements showing that the mortgage payments came from me because I was the one working. I've got statements showing that the down payment for the house came from me. So I can clearly show that it was our property, but we filed the paperwork and then we had to send copies of all the paperwork to the kids. He didn't have a will or anything, so if it's community property, it passes 100% to the wife. But if it's separate property, right, then basically if it's separate property and he has no will, the wife gets 1/3 and his kids get 2/3. So it could have been a big difference, right? Here she's living at her home, what she thinks is her home, and now all of a sudden she's like, oh shoot, am I going to be owners with his kids, and they're going to potentially force me to sell it? So luckily we had all the paperwork to prove it, but we didn't actually have to get to that point of proving it because the kids didn't file objections, but they certainly could have. Basically, I'm not going to talk a whole lot about this, just other than to say we've run into situations in the past where you had, say, a husband and wife, but it was only the husband's name on the loan or the wife's name on the loan. Well, the problem is, I don't know if you've ever tried to call and get mortgage information. if your name is not on the mortgage, good luck. Even if you want to call and say, hey, how do I keep making these payments? How much is owed? They won't share any of that. So unless you have the bank statements. But anyway, there's new laws that have come along to address that. But you do have to establish, number one, that the person died, and number two, that you're, as we call it, your successor in interest. You're the one who ultimately will be the one inheriting or receiving that property. Hagstead petition. So we talked earlier about the difference between a funded trust and an unfunded trust, right? Said I could create a revocable trust, but if I never put my house in the name of the trust, then it would still have to go through probate. Well, again, it seems kind of silly that if I went to all this effort to create this trust, then why should my estate have to go through probate? Well, one of the things that we usually do when we create a living trust is attached to the back, we say, okay, this is the property that I'm putting in there. This is my house. This is my bank accounts. I've got, a checking account at Bank of America and a savings account at Bank of America, or E-Trade investment account. So we list all of those different assets on there. Well, that just happens to be what I own at the time I create the trust. I'm going to open up new accounts. I'm going to buy more properties, throughout my life. So what happens if I don't get those accounts transferred? Well, with a Hagstead petition, you would basically submit that trust. You'd submit that list of assets that you filled out when you first did the trust. And if you can show to the court, hey, it was my intent to put these in, then the court will usually say, okay, yeah, I see what they were trying to do before they died. Okay, yeah, it didn't happen. And again, the court in that scenario will say, okay, we're not going to make it go through probate. Any questions so far? Lost trust. Again, I create a trust and the deed of the home says trust on it, but I can't actually find the trust. Thoughts? What could be the problem if I don't have the trust? What's that?
Attorney has it.
Oh, you hope the attorney has it, but what if I don't know who the attorney is, or the attorney's gone out of business? So, what would be the problem with not having a copy of the trust?
Shouldn't prove anything.
Doesn't prove anything, so what do you mean?
If you don't have a copy of it.
How do you prove who should get the property, right?
Right.
The trust typically says who gets the property when I die, but if I don't have the trust, how do I know that, how does the court know that I didn't say I'm leaving it all to the church, right? Or the SPCA? How they know that I didn't disinherit my kids or whatever. Okay. So basically what we have to do in that scenario is prove to the court. Like one time we had a blank copy. We had the notary's notary book showing that he notarized the document, but we just didn't actually have the copy itself. And there are different ways that you can look for trust anyways. So like if you know that the person died in Stanislaus County, you could contact the Stanislaus County Bar Association, and they could send out an email to all their attorneys that they have on their list and say, hey, did anybody here do an estate plan for this person? If you know that they lived back in another state or another county at some point, you can try contacting the County Bar Association in that way. So that's one way. But wills, trusts, they're not filed anywhere with, there's no sort of public recording of those documents anywhere. Because remember, we want to try and keep them private. So
So bottom line is it's very important to save documents.
for sure. Yeah. Now, as long as you have a copy.
So what is the smart way to keep it? Like
Probably multiple sources, right? If you have an estate planning binder, you keep it at home on your shelf. But you put it in a safety deposit box. It's not so important that it be in the safety deposit box because a copy would work. But some people will put like an extra copy in there. Some people keep a digital copy. Some people might share a copy with friends. We always keep a copy, of course, but the hard part is, what if you don't know that I prepared it?
Can you save with some website?
There's probably some places where you can go online and store it, but then you have to remember the password, right? So then where do you store the password? So I don't know if anybody's come up with a perfect system for it yet, but we
Put it in Dropbox and share it.
share it. Yeah, share the link. Yeah. if you've ever pulled the deed, you know how up in the top left it says recording requested by, and then it says mail tax statements to. You guys ever notice that? So like when we prepare the deeds, we always say up in the top left, recording requested by Wade Law Offices. So if you ever to pull the deeds, you would be able to look and say, oh, David Wade notarized it, or David Wade at least did, one rendition of it. It doesn't mean it wasn't amended later, but at least that would be a starting place. So, okay, so full probate, I put 8 months. Typically we're seeing more like a year for that whole process to go through. Basically, if probate, when a state's got to go through probate, you have a judge kind of overseeing the administration, keeping tabs on the administrator, making sure they're doing their job. And there's a bunch of different steps or hurdles that they have to go through to collect the assets, have the assets appraised, deal with creditors, stuff like that. I put strict rules for real estate sales. Is anybody here who's maybe handled a probate sale, have you ever had to go through one where it required court approval? Okay, so those are real pains.
We're going out of contract by the time you get an approval.
Yeah. And then we'll talk about how people can come along and they can actually overbid at the hearing. In fact, we've got one coming up in San Francisco here that, but they've got to show up with cashier's checks, and there's a bunch of different things that they have to go through. So, who's seen a probate purchase agreement? Okay, you got your typical purchase agreement, right? And no offense, but this is how I can tell if somebody, they're like, oh yeah, I've done probates, Well, if they don't do the probate purchase agreement, then that's kind of usually my first clue that maybe they
Don't have a clue.
haven't done a whole lot of probate purchases. But it's just one additional form. What are some of the things that are on a probate purchase agreement that are different than a regular purchase agreement?
The financing stuff works on a little bit different. The pages, they're different. It's just totally, it's not
Different
a regular,
disclosures.
right, different
and,
disclosures. Like the
yeah.
PDS and the SPQs kind of don't apply.
So it can actually be, a little easier.
A little
in a sense,
easier.
yeah.
But there's
But just-
probate advisories that you have to add to it. So
Yeah. So I'll just kind of run through real quick probate kind of from A to Z. So client comes to me and they say, hey, my mom passed away. She had a house. I need to get the property sold. So the first thing I do, like I said, is I'll go look at the deed. If it says mom's name on it, there's no trust. Hague step petition's not an option. The small estate petitions aren't an option. We're like, all right, this thing's got to go through probate. So we fill out all the paperwork. We send copies of the paperwork to the court. The court says, okay, I want to come back on, 2 months from now. And in the meantime, we have to publish a notice in the newspaper saying this is when the hearing's going to be. We're proposing to appoint this individual to be the administrator, and then we have to send copies of that paperwork out to all the relevant parties. So if I'm proposing to be the administrator and I've got 4 siblings, I have to send a copy of all that paperwork to the siblings, just letting them know, okay, this is the date of the sale. And then if they don't want me to be the administrator, right, they think they should be the administrator, they're like, oh, David's going to be the administrator? Wait, he's going to get a big fee for being the administrator. I think I want to be the administrator. So they could file their own competing petition. But let's assume there's no objections. Okay, everybody says, all right, yeah, David, you're the oldest, you be the administrator. So at that point, then we have a hearing. Nobody objects. The court says, okay, now, David, you're in charge. We're going to give you, and I'll go over the form, but your letters of administration. 1-page document that says, okay, now you're in charge. All right. At that point, I can sign the listing agreement. Okay. At that point, we can go ahead and get the property ready for sale. From the time that mom passes to the time that I get appointed, I can do certain things. We'll kind of go over those, but I can still go in and get the house cleaned up. I can still start to gather the mail, start to figure out kind of who the debts are. I can gather the tax information. There's not really anything I can sign, nothing that I can do formally or officially until I'm actually appointed by the court. So here's just a couple of different names, when you're looking at different words, that you might encounter: the decedent, the person that passed away, the personal representative, the individual designated by the court, as the one with the authority to make decisions, sign the final closing documents, things like that. You don't have to have a probate attorney. Typically, it's a good idea just because, obviously, just like I wouldn't go out and try and sell my own home, it's helpful to have somebody who kind of knows the ins and outs. Eventually, I could probably sell my own home, but am I going to miss things along the way? Are there certain things that maybe I'm supposed to disclose that I didn't know about? Are there different things that, I should do, but maybe I don't know to do? Obviously, benefits of going, with an expert. Worst case, it's probably going to take a lot longer. Maybe it's going to cost me some extra money because of the amount of time involved. The probate referee is the appraiser that I talked about, the one in charge of appraising or valuing all the assets. Typically, you want to want a CPA involved because of the fact that there's still going to be taxes that are going to have to be filed. And then, of course, realtor in the event that we're selling property. So again, I mentioned the court appoints the personal representative. Well, if you have a will, the will say, I nominate this person as the executor of my will. So in that case, the executor is the personal representative, the one representing the estate. If the person doesn't have a will, then we just call that person the administrator. If you need somebody to step in real quick and, maybe there's some sort of an emergency situation why we might need a temporary administrator, we call it the special administrator. I just call him the temporary administrator, I don't know. But so I already kind of gave the answer earlier, but when can the administrator sign the listing agreement? What's that? Exactly. Once he's appointed as the administrator and has his letters of administration. Okay. So technically, it's like hard because you're anxious, you want to get this listing, right? And so if I'm not appointed by the court yet as the administrator, and I sign the listing agreement, and then 2 months later I get appointed, well, technically that listing is not valid because I didn't actually have the authority to sign it. Okay. The other problem is what happens if somebody else gets appointed instead of me. Okay. So then it's kind of like, well, I spent a lot of time and effort trying to get this listing, and at the end of the day, it doesn't happen. So.
I have a question about that.
Sure.
If, say, a married couple is going through a divorce,
Mm-hmm.
and there's a probate, but they agree on the realtor through the sale, do they still have to wait for the court or to sign?
So if when would you have a probate and a divorce going on at the same time?
Or if it's a divorce?
Divorce, yeah. So I think with the divorce, if the divorce is still ongoing and they're both listed as owners, then I'm assuming they both probably have to sell. The only way that probably only one would have to sell is or only one would have to sign is if the divorce is over and they now have a judgment from the court that says this house belongs to you. Yeah. But in that case, I think still probably you have the spouse probably still has to execute something deeding the property over to the individual. Mm-hmm. So there's probably still some extra steps involved there. Yeah, with the divorce, you probably would have to wait till it's all. Now, I have done situations where the husband and wife, and maybe they were in the process of, they were separated but had filed for divorce, but they own property as joint tenants. So in one case, I had a client, she deeded her interest in the property, her half, as a tenant in common to herself, and then she turned around and deeded her half to her trust, which basically split the joint tenancy. So at least that way she knew, hey, if something happens to me, I know my 50% is going to my kids, and it's not going to him. So, again, kind of goes with that question, but again, until those letters of administration issue, and I'll show you an example of them, you can't actually technically do anything. But again, again, if there is some sort of an emergency situation where you need somebody to step in and do something, for example, say anybody ever a situation where you're like in escrow and the owner dies. So maybe you're already in contract, maybe you're supposed to close, you just need somebody to sign those closing documents. We can potentially go into the court and say, hey judge, we need somebody to be appointed on a temporary basis to allow this transaction to go through. The money will all go into like a blocked account, we can still have a regular hearing on who the full administrator should be. But again, that could be an example where you have to step in and, basically on a temporary basis, get appointed. Okay.
So,
Are we
so
doing-
if that happens, you still have to go through probate? Or
You'd still have to go through probate, but instead of probating the real estate, you'd be probating the cash.
okay.
So when as part of that probate process, we have to get all the assets appraised. And
But let's say if person who's selling a house individual, no trust, nothing, right?
right,
Then what happens if that individual dies within the transaction period? So,
it would have to go through probate.
okay.
Yeah. Because really, at that point, you have nobody that's formally able to even sign the closing documents, right? Now, it just seems like it would be common sense that, if I pass away before I sell and I've got 3 kids, presumably, you just presume that one of them, should be able to just step in and do that. But the courts, no, we're not going to let. And the title company, for sure, the title companies lots of times are the ones that are the issue, right? The title company says, hey, we need this, clear. We need it. In fact, I'll go over kind of some of the things that the title companies require in just a minute. As I mentioned, to get those letters issued from the time that we file the paperwork to the time that we get it, it really just depends on how quickly we can get in front of a court. I wish this was the case, but the law says that if I file my paperwork, the hearing on that paperwork is going to be no less than 15, but no more than 30 days. Well, the courts have just, they're just so backed up, that they just, even though the law says they're supposed to do it within 30 days, it doesn't go over well when I go to the court and I say, well, hey, the law says you're supposed to give me a hearing in 30 days. So we can do what's called an ex parte petition. And again, so anytime you're thinking like, hey, I've got an emergency situation, that's what ex parte is. You basically, say, okay, today's Thursday, I need to have this heard Friday. I look at the clock and say, okay, each court is a little bit different. But like Placer County, for example, they say, all right, you have to notify everybody else that you're going in on an emergency basis tomorrow morning at 10 o'clock. And so you have to notify them at least 24 hours prior to the hearing. And then you send them all the paperwork, and then that way they basically have to just drop everything that they're doing and show up at court if they're going to object and say why, whatever it is that I'm asking for, that they don't approve of. So there's different just kind of situations related to a person that's passed away where you might have an emergency situation. Those are usually pretty hard to get. The court's got to be really convinced that it's an emergency.
What would be an example?
Well, like I said, the example that I gave of somebody passes away, you're in escrow. Well,
Okay.
if escrow's not, supposed to close for 45 days, probably not an emergency. If escrow is supposed to close in 2 days, if it doesn't close, I'm going to lose this buyer, then.
How about if they are a joint tenant, then they just need to produce the death certificate, that's it?
Joint tenant?
Yeah.
Yeah, so if you have 2 people, they own property as joint tenants. If one of them passes away, all you have to do is record what's called an affidavit of death of joint tenant. You attach the original death certificate and you record that, and that just with the county, and that just says, okay, the other joint tenant passed away. Now I'm the surviving joint tenant, so I own 100%.
So it doesn't end up in probate.
Correct. If you own property as joint tenants or husband and wife as community property with rights of survivorship, it doesn't have to go through probate. Now, if the spouse gets the property or the joint tenant gets the property, but then they don't go and create their own trust or they don't add another joint tenant, then it would have to go through probate at the death of the second owner. Okay.
So if they are the critical deed, then it goes through the probate or?
If what?
If the husband and wife, the property is on husband name, and wife has signed the quit killing deed. So then how do
Good question. If I own a piece of property with my spouse, and I was the only one that could qualify for the loan, so sometimes, the lenders will require that the spouse sign a quitclaim deed saying this is my spouse's sole and separate property. Well, on paperwork it works good for getting a loan, but what my spouse has done is effectively said, I have no longer a community property interest in this property, right? It's his or her separate property. So as soon as you close, you definitely want to get it back in, but at the same time, the spouse or the other partner's not required to put it back in your name. So you obviously, there's some trust right there, right?
if something's happened, they will go through probate?
Yeah, so that's a situation where, in fact, the example I gave earlier, where the husband passed away and he had kids and she had kids. She was the one that put up the down payment. She was the one that made all the mortgage payments, but she also signed the quitclaim deed saying it was his sole and separate property. So that's why she was a little bit nervous that she might not be able to prove that it was community property, is because it said his sole and separate property. In this case, nobody objected, and all the paperwork that we submitted showed why it should be community property, even though the title said something else. So the judge ruled in
So
our
the
favor.
deeds, they do not need to record, they can prepare the deeds, add the name of the spouse and keep it home. Something's happened there, they can show that, and then they don't need to go to the probate, right?
Correct. I had a client who had a bunch of properties in San Francisco, and I don't know why I didn't do this trust, but the attorney prepared the trust, but then he also prepared deeds for each of their properties, putting the properties into the name of the trust. But he told the client, don't record these, just keep them in your safety deposit box. Or record them later if somebody passes away. Luckily, when his dad passed away, they were able to find all these deeds, so we could still go and record the deeds after the fact, but we couldn't find one of the deeds. So that one deed had to go through probate.
So legally it doesn't make any difference if it's recorded or not recorded.
Yes, that is true. You can still record the deed after somebody dies. But what happens if, I sell you a property, right? And I say, hey, I'm going to sell you this property. I'll put your name on it. I'll sign it. It's your property. But we're not going to record the deed right now. Okay? So then what happens, what prevents me from going and selling the property to your son and giving him the same document? Can I do that? So then what happens? Legally I can, right?
Whoever gets
Or legally I can't, but
Legally-
yeah, it's basically first to record.
First to record.
Exactly. So I might get money from you, I might get money. So that's why you as the buyer, you want to make sure you get it recorded, because that's the only way to protect your
And
interest.
if it's notarized, does it not matter?
If you look at it and say, well, wait, this one was notarized first, it could, yeah. But if I sell it to two of you, and it's got the same date on it, or even if it's got different dates, and you record yours first, then, the court's like, well, wait a minute, which one's valid? But either way, in the meantime, I took off with, both of your money. So, all right. So, letters of administration, again, that's the piece of paper that basically shows that you're in charge. Okay. And I'll show on the boxes, but there's IAEA authority, Independent Administration of Estates Act authority, full or limited. Okay. If I have full authority as the administrator, I can sell the property. I don't have to get court approval. If I have limited authority, that means I have to get court approval. And that's where we get into the whole bidding process and stuff. So how are we doing for time?
Good.
Okay.
What time is it?
10.
11:10. All right, I know I've talked for a while. I don't know how many, and I can stop whenever. Hopefully you guys are getting a lot, but not getting overwhelmed. It's probably just kind of like this big dump and you're like, you'll remember it all when you leave, right? Let's see if I can.
I have a question.
Sure.
What's the approximate cost for a probate where
So-
there's real estate involved?
Yeah. So the way that probate fees, and again, the lawyer's fee and the administrator's fee are the same. It's 4% of the first 100,000 of gross value. Okay. 3% of the next 100. It's not in my notes, sorry.
Well,
4% of the first 100,000. 3% of the next 100,000. 2% of the next 800,000. So what does that make the fee on $1 million estate?
Uncalled for.
Well, it's not 11% because it's 4% of the first 100, which is 4,000. 3% of the next 100, which is 3,000. So it's $7,000 on the first $200,000 of value, and then 2% on the next 800. Okay, so that's 16. So on $1 million probate, the lawyer's fee is 23,000, and then the administrator's fee is 23,000. That doesn't include extraordinary fees, which are over and above that. And then, like I said, the court costs are usually about 2,000. So on $1 million estate, you figure,
50 grand.
yeah, 23, 46, yeah, 50 grand basically. And then it's 1% up to the next like 5 million. Okay, so
hey Dave, just for reference, you're good through 11:30, and then we'll Q&A for a little bit, and then we have food afterwards.
okay, I'll kind of skip through these, and if I'm going too fast, let me know. Again, I'm really more here to just kind of let you guys know that I'm a resource. So if you want to call me, you got any specific questions, you're welcome to. Happy to send you my presentation so you guys can review that.
Yeah, that would
Answer any questions afterwards. Just really kind of more inform you guys. That way, if you run into an issue, you're like, oh, I think there's a way to deal with that, right? So, in these letters of administration, which you can't see, but it says here they either have full authority or limited authority. Okay. And again, we want full authority if possible because then it's just a lot easier to sell the property. If it's limited, again, there's this court procedure. You basically have to publish a notice of the sale in the newspaper. You have to take bids. You have to say when the last date is to accept the bids. And you have to submit the offer to the court for approval. Yeah.
How do you determine full or limited?
So, let's say, okay. So to probate, let's again say you got a $400,000 piece of property. If I'm the administrator, assume there's no mortgage on it. I sell the property, now I've got $400,000 in cash. All right, well, how do the other beneficiaries protect themselves and make sure that I don't run off with the money? Well, there's a couple ways you can do that. One is require that I, as the administrator, get a bond, which is like an insurance policy. You can say, okay, David, yeah, we're going to let you be the administrator, but we're going to make you get a bond, which is basically a $400,000 insurance policy that protects the beneficiaries. So that way, if I do run off with the money, they can then go to the bond company and they can get their share through the bond company. Problem with that is I've got to have good credit. I've got to put up collateral. Okay, well, maybe I don't have good credit. Maybe I don't have $400,000 of assets to back me up. Okay. In that situation, I might say, okay, well, when the house is sold, instead of me taking it and getting unlimited control over it, I'm going to put that money into a blocked account. Nobody can touch without court approval. So that's one way to do it. Another way would be, like I said, to get the bond. But like the example I gave where we're selling this house in San Francisco, the property's worth basically $1 million. And the lady couldn't get a bond, so we had to go and ask for limited authority, which basically required court approval, and then that money will then go into a blocked account. So it was basically the court saying, we don't want you to sell her. In her case, it was her sister saying, I don't trust you with the money. Yeah, exactly. So we had to get limited authority, which unfortunately ends up costing the estate even more because there will be extraordinary fees and stuff at the end. So, but yeah, when you want to get full IAEA or Independent Administration of States Act authority. So once you get your letters, you can sign the probate listing agreement, probate sales forms. But one of the things that we talked about, there's less disclosures, right? Usually you're selling the property as is, right?
Right.
And obviously the administrator, they're coming in, they don't know necessarily anything about the property, so how can I disclose things about this property when I didn't even live there? Okay. When I say court sale, that's basically the court auction that it mentions there. People can show up to court and actually bid on the property. So even though I've got a buyer for this property in San Francisco, somebody could show up and there's this whole kind of way to calculate what the overbid is. They have to come in with cashier's checks for 5% of the purchase price, but it will kind of run like a mini sale in the courtroom. Again, listing agreement, one of the other things you should point out is it's limited to 90 days. What is it with the regular, 6 months? Or is there any limit? If I hire you to sell my house, is there a limit on, does that listing agreement automatically expire after a certain amount of time?
You set it
7 months?
for. You could set it for 6. A lot of us set it for 6, right?
Oh, you set it for 6, but you're not required to. Okay. Okay.
Agreed upon. Whatever's agreed.
Okay. With the regular, with full powers of authority and the ability to sell it, the commission is basically whatever you agree on. Okay, 6%. With the court, with the one where the court has to approve it, that's limited to 5%. So that's another drawback to the court
How
sale.
the court handle the appreciation of the property? I mean, capital gains.
Will there be capital gains on the sale? So I can talk about that real quick. So if you've got a client that bought a house for, I'll get another one of my San Francisco clients. Her mom bought a house for $100,000. Her mom dies, it's now worth $1 million. Okay, so if the daughter sells it for $1 million, how much tax does she have to pay?
The 900,000.
What's that?
On the 900,000?
Hey, everyone agree with him? So there's something called a step up in basis, which is actually a benefit to the heirs. Whatever it's worth on the date of death, that becomes your new tax basis. So we don't look at what mom paid for it, we look at what it's worth on the date of death. You sell it for more, then you pay capital gains tax on the difference between what you sold it for and what it's worth on the date of death. But that actually applies to real estate, that applies to stocks. So anything that you bought low and it's gone up in value, your heirs can now sell it, and they only have to pay tax on the difference between the date of death value and the sales price, which is part of the reason that appraisal becomes
What
important.
if there's no difference?
If there's no difference, then there's no tax. If you sell it for less, then there's a loss. It's a good way to save on the estate taxes. And we didn't even talk about how do you pass your property on to your kids or your heirs without having your property taxes go up. But there's ways to do that as well. So, reason.
Then the property tax will be go up after that.
If you keep the property, there's exceptions. A parent transferring property to a child.
So it depends on the reassessment.
It depends on the relationship, really. Grandparent transferring property to a grandchild, as long as the child is not living. Parents passing property to a child passing property to a parent. Yeah, so there's different things. That's a whole other discussion. Let's see. This is just important, I guess, because if you guys do any probate sales, these are things that you're going to have to kind of get familiar with. So I definitely encourage you, if you haven't done one, but the opportunity does come up, definitely kind of find somebody in your office that has maybe done some of these. So you're just making sure you're doing the right forms, because you submit the forms, you don't want to have to go back and say, "Oops, do you mind signing these forms too?" Right? So yeah, the purchase agreement. Again, protections for your client, because again, you as the seller, you don't know anything about the property. So there's different things that's there, but just remember that there are some extra probate forms that you need to fill out. You can't really see it here, but this is on the probate purchase agreement, and it kind of details some of the things that you need to know about. Like if I'm the buyer, if I'm representing the buyer, I want to know, okay, is this subject to court confirmation or not? Okay, because that's certainly going to dictate, number one, if my offer, if it's accepted, if it's going to still potentially be subject to, do I still have to potentially worry about other buyers coming in? Because the listing agent, he still gets his fee, but if I'm representing a buyer and they accept my offer, but then I know somebody else can still come and swoop in afterwards and get it from me, I've done all this work, and then potentially I lose that commission. Okay, so not a whole lot you can do about that, but when you're reviewing these agreements, you can look at it and say, oh, this one's subject to court approval. I need to know, I got to make sure that when we go in with the best offer we can, because I don't want somebody to come in and, pull it from me later on. Some of the things that you can do that would help me, help the title company, once your client has signed the agreement, get me copies of whatever you have. Get us the final closing statement. Basically kind of keep track of what you've been doing, for marketing. If I'm representing the administrator of the estate and he's selling the property, well, I want to make sure that he or she is doing everything that they can to get the best price, because I don't want one of the kids to come along later on and say, well, wait a minute, you could have totally got more for this had you just sold it earlier or sold it later or not sold it to your buddy next door, right? So
So I have a question.
Yeah.
So let's say there's a property in the market and I submit an offer, didn't get accepted. I still have a chance to go to the court date and submit my offer again?
If it requires court approval. And so it goes back to that, does the person who's the administrator have full independent authority, or do they have limited? If they have limited authority, then we have to get court approval. And if we have to get a court approval, that means maybe your client missed out, they could still go in.
So I could go to the court that day and bring my purchase agreement and say we want to do 10 more thousand.
Yeah, the client, you should get notice of that hearing, and then you could show up at the hearing. You have to show up with with cashier's checks, like equal to 5% of the value. But there's a whole procedure for calculating what that increased bid amount would be. You can't just come in and if your client bid $400,000, somebody else can't walk into the court and bid $401,000. There's like a calculation, but it would be more like $420,000.
Yeah, but something reasonable. So all he has to walk in is maybe with like a $10,000 cashier check and $1,000.
Yeah, I was going to say some clients will bring multiple cashier's checks. Yeah. That way, yeah, because I don't want to bring in 10, but if I only need to give them 5, right? So I might bring two $5,000
So
cashier's
when
checks.
you submit the offer, the listing agent is obligated to tell you when the court date is, or you should find out in your
Anybody that submitted offers would then be entitled to get noticed of the hearing in that way. Because part of the idea there is that if this one falls out for whatever reason, then,
So if the listing agent trying to be sneaky and double-ended with a low offer, you could still beat him at his own game in court.
if the listing agent was trying to be sneaky. But the listing agent wants to maximize the amount of money. Well,
Yeah.
generally, right?
Yeah.
Unless they're selling it to their buddy or something. So, so some of the things that the administrator of the estate has to get a separate tax ID number for the estate. So that way, when escrow is ready to distribute the money, they know what account to put it into. And that's not going to be the individual social security number. It's going to be a separate tax ID number. So the administrator has to go open up an account. Those letters, we need a certified copy to give to the title company. Title company also wants what we call a comfort letter, but something from me that says, yes, there's, all the taxes have been taken care of. There's no outstanding liens or anything that didn't show up on the preliminary title report. Things like that. The biggest one probably to remember is this notice of proposed action. Okay, so if you're representing, the buyer or the seller, if I'm representing the administrator of the estate, you come to me and you say, okay, we've accepted an offer. We're ready to sell. So I need to know who the buyer's agent is, who the seller's agent is. I need to know what their commissions are. I need to know when you estimate you're going to close. I need to know who the buyers are. So I put all that in this notice of proposed action, this NPA, and then I send that out to all the beneficiaries. And I say, hey, we're getting ready to sell. And even though I have full authority to sell, even though I don't need court approval, we're letting you know kind of what the terms of the sale are. And then they can object, which you're kind of like, well, wait a minute. If I have full authority, why should they be allowed to object?
Sorry.
That's okay. But the thing with the notice of proposed action is if they do object, then we have to go through that whole court approval. So, but that's something that you just know it's 15 days. It's 15 days from the time. So if you got somebody comes in and they say, hey, we want to close escrow in 10 days, all cash, like awesome, let's get this thing closed. Well, just remember it's got to be a minimum of 15 days. Now we can't ask all the beneficiaries to sign a waiver of notice of proposed action. So just like with everything in law, there's always some exception. So if you're not sure how to do it, you just contact us, and there's sometimes a way around it. Again, one of those being that waiver. Let's see. This is more details. I kind of went into the details of that notice of proposed action. We talked about the fact that somebody else can contest the sale, right, which would then trigger it to have to go to court. Again, we talked about that it takes 15 days unless everybody signs a waiver. I don't need to know specifics about that sort of detail as far as putting in the NPA. I just need to know, again, commissions, names of the realtors, and estimated closing date and the names of the buyers. We kind of went through a little bit. Just again, remember, court sale, court auction, we want to try and avoid it. There's not a whole lot you can do. Either your clients are going to have full authority or they're not. But again, if you're representing the buyer, it's probably more important because you want to know, again, is there a chance that I might get outbid? This kind of goes through just how you calculate the amount of the overbid. So there is what's called a 90% rule. So remember I talked earlier about you have to get the property appraised. So again, if it appraises for $400,000, well, if I have full authority, I can sell it for, well, technically I could sell it for $300,000. Probably somebody's going to object, but I don't have to sell it for 90% of the appraised value.
As the holder, you obviously come out of pocket with the appraisal, and then it's come back to reimburse to the client. The
You as the agent pay the.
No, I'm saying whoever pays the appraisal is it returned back to whoever purchased the appraisal as a cost of doing the transaction.
Oh, buyer and seller, like if the deal doesn't go through.
Whoever's going to pay for the appraisal, they pay for it up front, right? Before they.
Yeah. So the administrator. Oh, sorry. The appraisal that I'm talking about is the court appraisal. That's not like your regular appraisal. Well, usually our licensed appraisers, but they kind of do the whole probate stuff separately.
That's the one.
And their fee is like a percentage. Yeah, the drive-by.
Okay.
Their percentage, they get a percentage of the appraised price. It's like 1/10 of 1% plus costs. Okay, so if it's a $400,000 property, 1/10 of 1%, that'd be like $400.
So that'd be calculated as cost, and then.
Yeah, so they'll send me the bill.
Right.
And if the client's paid me a retainer, we'll usually go ahead and cover the bill. If the client's used up, retainer's been used up, but at this point they have cash that they're administering, they can go ahead and pay the bills out of the cash. Okay. But what I was saying is when court sale is required, when court authority is required to sell, you have to sell it for 90% of the appraised value. So if it's appraised for $400,000, I can't sell it for less than $360,000. If it's been over a year since the person died, I actually have to get a new appraisal done, showing what the current value is. Again, you can't obviously sell it to your friends. You have to be able to prove that it's basically what we call an arm's length transaction. Let's see. Okay, some of the disclosures that are not required. Okay, transfer disclosure statement, seller's questionnaire, earthquake booklet. Those are all kind of typical things that you have to disclose in a typical transaction, or provide, I guess I should say. Things that you do have to still comply with. We do run into situations sometimes when the house is underwater. So what do you do in that? That just like kind of covers that. Once probate's over, then the money from the sale goes into the estate account. The administrator is going to hold it until the property is ready to be sold, or excuse me, until the estate is ready to be closed. That's kind of the end of
And
probate.
that's the time that the realtor gets paid.
What's that?
That's the time that the realtor gets paid until everything.
Realtor gets paid at close of escrow. Yeah, you don't have to wait till probate is over. The lawyer and the administrator, they get paid at the end of probate. When probate's all over, you file paperwork with the court and you say, okay, this is what everything appraised for, these are what the assets are, these are who the creditors are, and at that point, then the appraiser, then the judge will sign something saying, okay, here's how everything should be divided up. So yeah, I don't get paid till the end. The administrator doesn't get paid till the end, but you get paid when the property closes escrow.
Can the administrator be the listing agent?
Yeah, I mean, it's probably a family thing, right? If you're the listing agent, if it's your family and they're like, hey, you're a realtor, yeah, you might as well sell it instead of somebody else. Other families will be like, well, wait a minute, how's that fair? You're going to get an administrator fee, you're going to get a real estate commission, which is totally fair because you're doing all the work, right? But it just, for some people that doesn't go over so good.
What's the quickest you've done a probate and the longest one?
Well, I've got one that's still been going on for actually it's been going on longer than that. But that's other issues. We've got out-of-state property, and we had tax issues, and we had litigation. But the fastest one you could do is if I file the paperwork today and I get a hearing, let's say in 2 months, by the time the person gets appointed, there's a 4-month waiting period to see if creditors come back and file a claim. So right there, you're at 6 months. If I file my paperwork at that point to close, and it takes me another 2 months to get into the court, then I'm looking at 8 months total. But again, with you guys selling property, as soon as that person gets their letters of administration, right after that first hearing, you can get the house on the market and get it sold. So you don't have to wait until probate's over in order for the assets to be, in order to get the house sold. You can look at these later, but just a couple of things that, ideas, suggestions for you, on how to get probate leads if that's something that you're interested in. I don't know what the databases are, but like I said, I know that there's a lot of, one way is, of course, just, meet probate attorneys, right? Attorneys that specialize, that do probate. That way, if a sale comes up, or the attorney's got a client that passed away and they need somebody to sell it, you're right there. You've got the experience. Again, I don't think it's difficult, but there are just some extra forms that you need to know about that if you become aware of, it just, you're going to just kind of set yourself apart. So if any other opportunities come up, through your agency or whatever, where you have a chance to just learn more about that or even partner up with somebody to go through one or two, I think you can kind of put yourself out there as kind of that specialist. I know one realtor up in the Sacramento area, they've kind of started a little side business where they basically come in and they do offer to basically come in, do all the cleanup, right? Because you get somebody passes away, you got to get the house cleaned out, get the property sold, get it staged, get it listed for sale. So they kind of come in, and she's partnered up with another group that can come in and kind of offer those services, kind of be kind of that one-stop shop, for getting properties listed. So that's pretty much many different ways to meet attorneys. I get these sorts of things in the. I borrowed this from a friend, so it's got his name on it. But basically, I get different sorts of correspondence. I throw it all away. No offense. It was probably because I've got a couple, realtors that are just there locally that, hey, I'm probably going to be more inclined to go with somebody I know as opposed to, you and the other 10 people that are all calling me saying, hey, I know that you have somebody who passed away. So I would definitely say getting to know, people would be, a great way to do that. But even going to the court and maybe sitting in on a couple of probate sales just to kind of get experience. So you're like, you kind of know some of the, just what's the procedure, right? So a couple things there that you could do. Maybe just kind of go out and market to your services. All right, well, what distinguishes you from, the other realtors that claim to do probate. You know, what's your background, what's your experience, what are some other services that maybe you could offer. I had one time, this is a number of years ago, a realtor, because the client lived out of town, right? So they needed somebody to pick up the mail, check on the house, you know, make sure it was okay. So this guy offered to, you know, drive by the house, check on it every once in a while, grab the mail. Again, kind of a pain for you, but, you know, since the client didn't have somebody local, you know, they kind of offered that just little extra service to kind of be that extra set of eyes and ears. So, I think that's kind of it. Sorry it took so long. Never know quite how long these things are going to take, but hopefully you guys each got a little bit of something that you might be able to take, if nothing else, just to know, you know, kind of where you can go to look for resources if you have any questions in the future. But I'm here to answer any questions. That's my office number. Let me go ahead and just give you my cell phone number if you want to write it down. You're welcome to call me direct.
It's on your business card, Dave?
It's not on my business card. My office number's on there, but you can always call, and my receptionist can, you know, put you on the calendar. Or I've got something in my email where you can just, you know, grab a time on my calendar if you want to talk a little bit more about this or a specific situation that you're dealing with. But I'll leave the cards up here, and let me give you my number if you want to write it down. It's 916-220-7147.
How do we go about getting a copy of today's presentation?
If you want to take a card, email me, and then just I'll email you a copy. I could.
I mean, if you guys can leave your business cards here, we can email everybody as well.
Yeah, there you go. All right. Any questions?
Good job.
No, thank you. Thanks for coming.
So any last questions for David before we take off? So on behalf of the JRP Group, my name is Dan, and with Brahman, we appreciate you guys coming out and sharing some time with us this morning. How much longer could a topic like this go on for, right? I mean, it could be hours. Do you have that 100-question test, true, false? We're going to get ready. No, a little bit more. We really do appreciate you guys coming out. We'll be having a lot more seminars like this in the future. Look for them. Also, we would like, if you have a business card, please leave it. If not, if you could go ahead and sign in, what we'd like to be able to do is get the contact information to David. We'd also like to add it into our database so we can provide you with updates on this class and then additional classes that we have going. So in closing, also, there is an awesome open house coming up this afternoon. It's a Halloween-based open house. Time and address is?
It's 2380 Paseo de Sol in Turlock from 3 to 5.
Cool. 3 to 5 here out in Turlock. They're giving away all kinds of stuff. So, also, as far as food, what do we have today? This is Love Creek from Lending Assets.
Hi everyone, we've got lunch for everybody, Togo sandwiches and some dessert, so please have lunch.
I'm vegan.
Throw the meat off. So, if you guys have any other questions, then again, we appreciate it. Cards, and if not, if you could go ahead and write your name and information on here, and then we'll provide that information. So again, thanks everybody. Appreciate it.
Yeah, you're coming.